Strikes over pay by government workers are not uncommon nowadays. Could this be a mirror image of what could be happening elsewhere in the economy? Interestingly, government inflation figures, in other words, the cost of goods and services, seem to show that inflation is low. But these are averages that do not yet tell the actual price of goods and services, which are not really going down.
Right now, the real inflation rate is very high in Ugandan market. Because of that, the consumers are not having a sufficient cash in their pocket to spend. One reason. Another reason that there is a demographic issue. Social issues are very high in society. To give an example, what is your family number that you have to take into consideration? One man is earning and 5 people are consuming that. Then definitely disposable income will be very low.
For instance, housing rent rises but never comes down, and so does school fees, which are key costs for most former working salary earners in Uganda. In the same instance, however, the salary has remained static. But perhaps the incentive is in borrowing rates coming down, which should enable businesses borrow and improve cash flow in the economy. But borrowing even now must be done with some caution.
Before borrowing, you have to check a lot of homeworks. You have to do a lot of homeworks. See that is there any opportunity for that particular fund? If yes, what kind of opportunity you have in your business?
Borrowing, even at lower interest rates, must be cognizant of the demand patterns for goods and services in order to make business sense, including the risk of default, based on the time one has to make more money out of the borrowed funds.
This kind of impact, it will take some time. It will not take immediately. Today we reduce the interest rate. Tomorrow morning commercial banks are reducing interest rate and economy start moving. No, it never happens like that. There is a time for that. 1 to 2 years it will take to get the effect of that particular policies.